Good morning and welcome to this week's edition of Winston's Weekly, covering all things property. I'm Paul Sanger, your host for today's property chat. Winston, welcome back.
Thank you.
Now, Winston, let's start off today with an update on what's been going on in the property sector.
Yeah, it's been a quiet week, generally speaking. Now that results are all out of the way and investors are sort of going through those results to see what they're going to do, but a lot of it has to do with where the bond rates are going,
yep.
Particularly in the US, and they've kicked up a little bit overnight. But whatever the central banks are going to do in terms of cutting rates, whether in the Fed in the US or the RBA here, is going to be all data dependent. So it'll depend on how the data that comes out, when it comes out, and how they interpret that data. But there's obviously been a slowdown in terms of consumer spending, and so I would suspect that the likelihood for rate cuts is on the horizon, but timing again is the issue.
Yeah, because we discussed last week that the US Fed chair was kind of indicating the markets that a rate cut or two is definitely on the cards. Overnight, the CPI number came out, and it was higher than expected. Certainly a surprise to the market. The market came off, and obviously the bond yields reflected that surprise overnight. Do you think that's going to impact the stocks this morning?
I think so. It's probably going to put a view of pushing out rates a little bit longer than expected, but I think the issues in terms of the CPI primarily are the services, cost of services, insurance, power, all that sort of stuff, which is still fairly high right across the board over in the US as well as here.
Yeah, no, I did read something this morning that post that CPI number, the actual views on a rate cut in June only dropped fractionally,
yeah.
And in July moved up, fractionally. So it seemed like a fairly muted reaction,
yeah.
Compared to that number. That's probably the market's still focused on other data points that are coming forward.
Correct. Again, in reality, we know there will be rate cuts. We just don't know when, and trying to sort of work out exactly when it's going to happen is a bit difficult.
And the market's gone June, July.
Yeah.
Who cares? As long as they come.
Yeah.
All right, let's move on. Can you give us an update on the Newmark property deal and also the current position of Euree Asset Management?
Okay. Well, during the week, Bunnings came out with an announcement that they will make the bid unconditional next Thursday, the 21st of March.
Okay.
And at that stage, prior to that announcement, the final date, the offer was open until March the 22nd. They've extended that for another 2 weeks to April the 12th. I would have to say probably because acceptances have been relatively slow. They've got 36% to date of the group. So, and they want 50.1. But when it goes unconditional, the 50.1 disappears because there's no condition applying to that. So I suspect that they're going a little bit slowly. The position for Euree hasn't really changed. We're still endeavouring to get to the 5% threshold to call an EGM and remove them as the RE.
I appreciate the update there.
There is another M&A activity that's been taking place, and there's been a development on that front. That's Eureka, which is subject of a bid by the Aspen Group.
Yep.
It's a paper bid. It's 0.26 of a security in Aspen for every Eureka share, which at the current level of Aspen values it at about 47 cents. Now, there's been a substantial shareholder notice come out, or a couple come out, from a group called Philatron, who have amassed an 18% stake in Eureka, and they've paid prices up to 54 cents. So it'll be interesting to see what develops on that front.
And if you're a betting man, are they going to go through the magic 19.9 and cause some trouble?
Personally, I don't think they'll go above 19.9. What they've really done is, having gone above 10%, they can effectively block the full acquisition and delisting of Eureka. So it will remain a listed entity because they can block the compulsory acquisition.
And they also increased that stake over the last couple of weeks.
Yes.
So there is intent.
Yeah, there is intent.
Got you. And look, looking forward to next week. What should we be expecting from the property front?
Probably more of the same. Interestingly, the sector up until the close of business yesterday is up 3.5% for the month. So another good month for the REIT sector. Also, in the next 2 weeks, most of them will be going ex-distributions for the March quarter, which makes them a bit attractive. I don't expect people to sell prior to getting their distribution. So prices should hold up over the next couple of weeks.
Winston, thanks for your time today and your insights.
It's a pleasure.
Thank you.